Good evening, all you beautiful degenerates out there in FinTwit and Discord. Today is November 1st, 2023. Welcome again to another wonderful edition of Reactive Recaps, starring as always me, Rancid R2, and always next to me, Yellowbird himself.
How
How
you
you doing,
doing?
Yellowbird?
Pretty good. How are you doing, man?
Surviving Halloween. Whole story about that later.
Oh yeah.
I just wanted to wish everybody, since it's November 1st, happy FOMC Day. Big day in the market. If you don't know what that means, you should be listening to us a lot more. We'll cover that a little bit later, but I hope everyone traded safe and smart, and we all made the day out green, or at least baby red. If this is your first time listening today, I wanted to congratulate you on being the last day you'll ever have to eat instant ramen noodles again. I'm going to always go over the format, which is simple. My man Bert and I, we go over some simple recaps from either the futures or the option market, point them out, teach you what they look like, and hopefully you guys are smart enough to remember what they look like, execute them, and heaven forbid, make some money. So we'll start today with Yellow, going over some future trade he made this morning, and I will toss it to the man.
All right. So this is highlighting a trade that I made this morning on NQ. What I like to do on FOMC days, if we have a good price action in the morning, is to get that done out of the way on FOMC days and just walk away and not deal with the afternoon mess that can be FOMC. So as you can see here, we had a downtrend overnight going from 3 o'clock in the morning. We broke it at 6:30 in the morning. This downtrend came back down, kind of retested it at 8 o'clock, and then showed some decent strength. We started forming this flag here. I placed an order here at the 435 level. And I'm going to go ahead and play this price action through. Speed it up. Now, as this flag begins to form and play out, I like to take these flags after they break trend. So here we had this downtrend. We broke the trend up and we showed strength. So I'm looking for an entry on a bull flag. Had we broken an uptrend and showed strength down, I would have been looking for a bear flag. All flags really are is where the price action has strength, a lot of buying power, and then it kind of consolidates before moving higher. I like to do what I call front load these flags, and that is enter on the bottom of the flag in order to manage the trade as it goes up. Here the order filled. I used my ATM strategy of buying 33 contracts for this trade, taking profit every 10 points, and stopping even with my stop even moving up at 10 points. All right, I'm going to speed this up some because remember, this is pre-market. This is 8:30 in the morning, so it tends to move pretty slow, the price action itself. All right, we got a decent wick up there. It blew through the flag, moved up. My stop went to break even. And from this point on, it was just managing itself. Here we are, 15 times speed. I'm already up 50 points here. And as you look at the charts from earlier today, it went all the way up and continued to just go. I have my last runner's take profit up here at 200 points. We reached up here to the previous day high, wicked back down, and then came up. If I remember correctly, we kind of chopped around in this area a little bit and then moved up higher. So that is a playback of the one trade I took today, because after this trade, I was satisfied with the gains on all my accounts, and I just went on with my day and stayed away from FOMC.
A 200-point trade before pre-market, people. That's crazy, Bird. I love it.
It happens. It happens.
I think, one thing that I wanted to highlight from his recap, that he just says casually because he doesn't understand how epic it is that he just said. Scaling and managing your trade. Yellow's not sitting there watching every candle. He has these ATM strategies set up so he doesn't have to. If a trade works in his direction, it automatically moves stops up and it goes long. If it doesn't, it closes out. So his risk is completely managed. To all you people out there, whether you're trading options or futures, if you're not, one, managing your trade successfully, and two, scaling things out as they go, you're missing the entire point of trading. If you think any of these fools out there are, when they post 100-point gains on NQ or 1,000% gains on their options, if you think they're holding a full-size position, I've got a bridge in Brooklyn to sell you. Very, very cheap. Scaling and risk management is the name of this game. Yeah, well, I think you would agree with that, wouldn't you?
Most definitely. And any furu that says any different, definitely stay away from them. If they are not scaling and taking profits and managing that risk, that is someone you want to stay away from. Most definitely.
If they're not doing that, they're trading really small to post gain porn, or it's all bullshit. That's the only two answers. Anyone with any financial sense does not throw the dice on every trade. And if you're throwing the dice on every trade, stop it. All right, so now that I ranted a little bit there, I'm going to go to my trades for option traders. We're going to stick to SPY today, before FOMC, obviously. And I'm just going to preface this with saying, like, even though option traders can't trade the pre-market for the most part, it's important to look at the pre-market because you will see trends forming. And trends, I hate to say it, can be your friend. Okay? It gives you a sense of what the market structure looks like. And if the market structure looks bullish, stop trying to catch knives. Follow it. Okay? Wait for pullbacks. Follow it. Okay? So, as you can see here, off open, I'm going to highlight this first oval I have highlighted right here. Off open, we dumped. It happens for a pullback, it looks like. So, after the first initial bear candle and the first bull candle, I was looking to do a trend line, hopefully, and see what was going to happen. You can see you can't draw a trend line immediately. You have to wait a couple candles into it. But as you can see, there was a channel forming. Not a huge bullish channel, but it was a bullish channel none the same. So I drew a trend line at the wick or at the bottom of every candle that touched the bottom of the initial bull candle. So a free piece of advice for everyone that trades in the stock market. There's a common trend of things happen in threes. Okay? I'm sure Yellow would attest to the fact that bear flags are best done after it touches it 3 times. Okay? Trend lines are very much similar to that because they're all just channels, guys. They're all level. It's all levels. Okay? So you can see in this first situation, we start the trend line here, hit once, basically twice, 3 times, and it wicked off of it. Now, if you're a more experienced trader, most people, and I'm sure Bird himself would admit to this, would take this trade here. Maybe not right at the bottom or put a limit order in, but maybe not. Maybe get it here. But still, as you can see, it's a significant rise. That would lead to decent profit. Okay, but you're conservative. I'm conservative. I get it. All right. I'm always afraid of getting the rug pulled on me, which has happened more times than I care to admit. But here we go, fourth time. Look at that beautiful candle. Comes down, touches it, immediately rejects it. Candle close, buy. Buy. Oh, a little confusion. Up, 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 up. Fantastic trade. That's a 100% option trade. You doubled your money. Congratulations. If you're smart like Yellow, you know what you do? You walk away for the day. But this is FinTwit and Discord. I get it. You're all a bunch of degenerates, so you want more. Okay? I don't recommend that strategy. But if you want to throw the dice, let's go. All right? All right, so then we go up, up, up a little bit more. Here we have a high of day. Well, we don't know it's high of day yet, but this candle fails. That's the high of day. Second candle goes a little bit higher, fails, rejects. And we reject a little bit. We come back up close. Boom. That looks like a trend line that I can draw. So I draw this trend line. Hits it once, hits it twice, rejects, down, 3, 4, 4. Here, I'd take it. Okay? And as you can see, pretty good result. But I get it. Again, conservative. I don't want to lose my money. I don't want to eat ramen tonight. I want to eat at Wendy's, right? So you wait. Even more. After 4 touches. Oh, look at this gem. Hits it again. Perfectly. Another beautiful rejection. And down. So, what I'm trying to point out to you guys is, if you're bored, draw a line. You got nothing to do while you're watching a candle close? Look for things in the candles that you can execute off of. Maybe your line is wrong, but you won't know it's wrong until you draw it. If you're bored in the market, do something. And when I say do something, I don't mean buy something or sell something. I mean draw a line. Look for a pattern. Look for a channel. These are the things professional traders like Bird and whatever furu you're following are doing all the time. When Bird sees a channel like that, after the second touch, he's setting a limit order on the trend line. So when he doesn't have to trade, he just sets it and walks away and makes a fortune. That, everybody, is what we are trying to do here. To teach you to see the things coming in front of you. And then you don't have to stress. So those are my 2 basic overviews of SPY today. Trading, and we're going to move to a new segment. This segment, we're just going to talk, since it's FOMC day, which is an important day in the market, and everyone knows that. So I just wanted to discuss FOMC and what it means for the market and retail traders in general. I'm quite certain that Bird will agree that this is a very important topic to cover, right?
Most definitely, yes. It definitely is. There, you could see it across a lot of FinTwit and in Discords that people foam at the mouth when FOMC comes around. And I think a lot of people don't understand it, and they like to just throw money at it. And they definitely should not be doing that, in my opinion.
So, for those of you who aren't aware, I'm going to dumb this down as simple as I can for all of you, okay? FOMC is basically the Federal Reserve, okay? And the Federal Reserve are who set interest rates across the board for basically all lending in the commercial and the personal market. So why do you think that's important? Well, let's just speak to QQQ on this. Tech companies, they're cash poor, generally. So they need cash to operate before they turn a profit. So where do you think all these people go to get cash? Banks. And banks set interest rates based on the Federal Reserve. So if interest rates are high, there'll be less lending. If interest rates are low, there'll be more lending. More lending leads to tech prices rising. Less lending leads to less tech innovation. So, other words, you can predict price action on QQQ and Q specifically based on FOMC comments, regulation. Hell, even speakers can move the market 50 to 100 points at the drop of a hat. Bird, am I wrong on this?
No, you are not. There has been, I have witnessed some serious, violent market reactions off of things just regular speakers say, not even just JPOW.
So, why Bird told all of you idiots to avoid playing FOMC is because you're listening to this podcast. Therefore, you're looking to learn. If you're looking to learn, playing FOMC is a gamble. Now, I don't know about Yellowbird, but I don't play in the stock market to necessarily gamble. I make calculated decisions, correct?
Oh, yeah. I leave the gambling to Saturdays and Sundays.
Hell yeah. So, we just wanted to include this portion of FOMC to advise you stay away unless you're very comfortable in the market. And when I mean comfortable, I mean you can accept the market education that you may receive as a result of playing. I'm not telling you not to play it, I'm just saying be prepared for the consequences, positive and negative. So, with that, I thought we would kind of like discuss a little bit more about trend lines and how vital they can be to one's personal success. Now, I can only speak from my own reviewing of Yellow's trades in the past and seeing that he relies heavily on trend lines and why they're important. So, Bert, can you just like speak for like a couple minutes on how you use these things and why you think they're so vital to someone, a retail trader specifically, successfully navigating an often chaotic market?
Yeah, most definitely. If we look at my screen here, this is NQ once again. We see these take the low, make that the anchor point of the trend line. And then you make contact with the bodies and the wicks on the way up. And you have, it's just that simple. Just that simple to drawing a trend line is you can take the high, which I have highlighted here from the overnight session. The high here, we tapped 1, 2. We've got the anchor point. We tapped once. We tapped again. That would have been a good trade to go off of. We came up here, got near it, did not reach it. Here we broke it. But then once we broke it and retested it, it was respected and we saw a big rise again. These are very simple tools that can be used. You don't have to learn how to trade indicators or clouds or EMAs or anything like that. This is a simple line that you take, you put it at the low or the high of the day, you find the contact points, which are easily findable. If you're going from the low, you just find the lows in the price action and you draw a simple line. I call it using my crayons. And you draw your points and you simply wait for the price action to get there. If you're trading futures or if you're trading futures and using Ninja Trader, you can actually create an order to enter a trade once it makes contact with that trend line you drew. So you don't have to sit here and put in a limit order and then trail it up manually all day long like this. You can just curate the order off of the trend line and walk away if that's how you want to trade. But that is basically trend lines. It's very simple. It is very easy to do. And that's the whole principle behind my trading strategy, is to keep it stupid simple. Because the more complicated it becomes, the harder it's going to be. So if you just keep everything nice and simple, you trade trend lines, you trade flags and basic naked price action, then you're not going to get the analysis paralysis. You're not going to get bad entries on, trying to figure out all these different indicators, the MACD, the RSI, the ATR, all these crazy different things. You have all the information you need right here in front of you. You see it, you act upon it, you react, and you manage the trade. It's very simple, honestly. And the simpler you keep it, if you just, when starting out trading, if you trade nothing but one thing, trade trend lines. Once you feel comfortable with trend lines and you get consistent profits with trend lines, then you can move on to something else, like flags or wedges or head and shoulders patterns or stuff like that. But just wait and see how, before you start adding things to your toolkit, become consistent with the simple basics. And before you move on, be able to grasp and have a handle on the one thing you've been working on before moving on to the next thing. One thing, I'm kind of going on a tangent here, but one thing I see a lot of traders do, and I have done myself, is jump from system to system to system to system. And that does not work out for a lot of people because they jump systems before they are able to grasp it and actually get consistent with it. If you have your system and you work at it and you become consistent and you stick with that system, then you will become consistent with the system, and the system will work for itself. If you keep jumping looking for the next best thing, you're never going to be profitable because you're not putting in the time and the effort to learn and become consistent with that one system.
Do you guys all hear what he's saying? I hope you are. Don't overcomplicate this. You don't need a master's in finance to figure this out. His analogy, where this is just crayons, that is as true of a statement as he could possibly say. I basically showed you guys 2 trades today where I drew a line, a simple line that would have made you enough money today to pay your effing mortgage. Stop overcomplicating it. Be patient. Don't be a jack of all trades. Be a master of one. I think that is what, in a little harsher way than I may be getting across, but I think that's what Yellowbird is getting across here. Be a master of one before you think you know what you're doing.
Yeah, Most definitely. Um, I did it myself. I jumped from strategy to strategy to strategy, and it did not work. And finally, I just broke everything down to its simplest form, and that's when I found success. Is the I took a lot of thinking out of the equation with my ATM strategy that I use. Instead of having to manage the trade and guess where the price action is going to go, how far it's going to go. Hey, is this going to go up to reach test high of day? Is this going to go to the previous high of day? Is this going to go here or here? I don't have to worry about any of that. All I have to worry about is 10 points. That trade goes 10 points. My stop goes to break even. It is a guaranteed green trade. I am done with it. Like, I don't have to try and guess on where everything's. I'm just simply reacting. I see the trend, the tap of the trend line. I buy or I sell, whichever way it's going, and the trade is over for me. Whatever happens, happens. It's either going to be green or red. That's it.
You hear that? You don't need the YOLO FOMC to make up your losses from the morning. Take smart trades. Manage trades. Scale trades. Look for your system. Execute it. Be done for the day. And go spend time with the people that matter in your life. Everyone that works a 9 to 5, I feel bad for them. No one should have to work that life. Everyone should be able to spend time with themselves, their wife, their husband, their families, whoever. Learn this shit, and you can do that. Yo, you want to talk about Halloween real quick? I had a great one.
Yeah, I had a good one. It was quite fun. Kids got lots of candy. We have a tradition in our neighborhood that about every other house, every third house, either is handing out Jello shots or beer. And so I got my quote unquote candy last night. This morning was a little rough for school drop off, but we managed. I got the trade in today, and like today, what we're talking about with spending time with family and everything. I made this one trade today before market open. 9:30 when the market opened, me and my wife were at a store shopping for whatever she wanted to shop for. And me and her were spending quality time together. I wasn't sitting here staring at a screen and everything like that because I had already made my trade, been done for the day. But yeah, Halloween was great. The kids love dressing up and running around, and we had the in-laws coming to town and go trick-or-treating with us, and that's always a good time, getting to spend quality time with the family.
Hell yeah. That's what it's all about. I mean, I had a very similar Halloween, my daughter is 4 years old, so we had all her little friends over for a Halloween party at my house. I ended up carving for the season 13 pumpkins, which is my most ever. And I was only able to do this because I don't trade every candle. All right? I look for things to trade. All right? I'm not dying to be a market participant. I'm waiting the market to come to me. Okay? If I don't make a trade in a day, that's fine. That's okay. I don't need to make a trade every day. I don't need to make a trade every hour. I don't need to make a trade every minute. A lot of people in this market think that you need to trade almost every candle. If you miss the trade, wait. It'll come back. I promise. All right? And if it doesn't, I'll see you tomorrow. The only reason me and Yellow take our time out of our day to do this is for a simple reason. Is because we were where you are. Hopeless. No clue what we're looking at. All right? But you know what we also decided to do? both of us, we're not quitters. We see the people that post all this ridiculousness. We don't do that because we don't need to. We're not trying to prove a point that we're the world's greatest trader. What we're trying to prove is that anybody can be a trader. Okay? We'll never admit that we're the smartest guys in the room, but we'll always admit we're always in the room. Okay? So all of that is what we're trying to get across here. And that's something that I think is very important to sink into all retail traders, is that you're there. If you have entered this market and just looking casually, you have the potential to do it. And what you'll get from putting the time in is the freedom. The absolute freedom to do whatever you want, whenever you want. I'm not saying you're going to live in a $10 million house. What I am telling you is you're not going to have to sweat if you have to go to a doctor's appointment at 11 a.m. or you want to do a surprise vacation for your family. You'll be able to do it.
Yeah.
And we're going to help you get there.
You know, as retail traders, a lot of us aren't professional traders and not relying on this money as our primary source of income. So you can't sit there and look at it as, you know, I need to make this much money to survive off of for the year. I believe, and what I like to see people do is to try and trade, not depend on it, but try and trade, make enough in a month or whatever to cover the mortgage, and then some money for a family vacation. That's what I like to see, is the people that can use the trading to help cover bills and free up money so they can do more things with their family.
Bert, I think that's a really important thing because trading doesn't have to be a full-time job. You know, you can set up, these brokerages allow you to set up automated trading. So what you could do is you could set up price alerts, so something will hit your phone while you're at your job, or you could set up an ATM, which Bert talked about earlier, where the trade is automatically managed. You set it up before you go somewhere, you have a call or a meeting or a Zoom or whatever, and it will do the trade for you. Win or lose, you would have win or lost anyway. You don't need to watch a screen all day. You can set trades up automatically if you put the time in to learn it. We are 2023. We are in a very unique situation, technologically speaking, where people 20, 30 years ago would kill you to have the opportunity to have the automation that you have right now. There are no excuses. Pay the time. Put in the work. Draw some lines on it. Get some crayons. Draw a line. Let's make some money.
Yeah, and don't get distracted by the huge numbers that you see out on Twitter and everything like that. That's one thing I do not like to do, is I don't like to post ridiculous gains because I feel like it creates an unrealistic expectation. I mean, just try and make enough money to gain, you know, cover that mortgage, cover that car payment, whatever. If you are managing and making $100, $200 a day, then at the end of the year, that is going to be a ridiculous amount of money. I mean, you're sitting there looking at, let me pull up the calculator real quick.
Consistency is always more important than a P&L. Don't ever forget that. I don't care if you're risking $1 or $10,000. The fools out there, they show their gains. Let them show their losses. It's all smoke and mirrors. Get consistent, learn a system, execute it, and you'll be fine.
Yeah. I mean, there's roughly 250 trading days in a year. If you average $150, that's $37,000. that you are making extra a year. That,
Let's go.
I mean, what would you do with an extra $37,000? I mean,
Nothing I would recommend to the rest of the people listening. Snow machine.
it buys a lot of hot dogs, that's for sure.
That is a.
But that's a subject for a different day.
That's a personal subject that I will get into another day. That I absolutely love hot dogs, and everyone else should, because they're amazing. God's gift to man. However, I think we've tortured you all enough this evening. So I will say this: you can do it. You're smart enough that you're looking at the stock market. You're capable enough because you're listening to this podcast. Okay, take it slow. Don't worry so much about your losses. Focus on getting consistent, because every indicator works 100% of the time, 50% of the time. And never forget, when there's chaos, there is opportunity.